rider called the accidental death rider. By the way, if you find value in this content, subscribe to the channel and turn on post notifications. I also hire agents nationwide to sell life insurance 100% over the phone, and we provide leads to all of our agents. No driving around, no buy-in leads, none of that. So email me at jve@thejve.com if you're interested in learning more. So the accidental death rider is pretty straightforward. This increases the death benefit if the insured passes away on accident. So if they die in a car crash, then it can double, if not triple, the death benefit, depending on what type of accidental death rider is selected and added to the coverage. It does cost extra money. All riders cost extra. Well, most riders cost extra money. So, but for just a small amount, they can double or triple the death benefit if they pass away on accident. And typically, they have to pass away within 90 days of that accident happening. So it's usually not like, okay, you have to die in the car crash. Like if you get in a car crash and you die a week later in the hospital, that's still considered an accidental death. Okay, it doesn't cover any natural cause deaths. It doesn't cover any self-inflicted deaths. Like you can't jump off a bridge and say, oh, it was an accident, right? It has to be like a true accident. And then there's also an accidental death and dismemberment rider. Now, the dismemberment part of it, before I said accidental death rider, the accidental death and dismemberment rider, what that allows you to do is receive money from the policy if you lose a hand or both hands or one arm or both arms or one leg or both legs, or you go blind in one eye or blind in both eyes. So typically, if there's a face amount for the dismemberment rider, the accidental death and dismemberment rider, that'll pay out if you lose like both limbs, both legs, both arms, both hands, or both eyesight in both eyes. But they'll also usually pay out like half if you just lose one of those. So it's kind of a gruesome rider. I know it's kind of gross, but yeah. Usually the accidental death and dismemberment riders expire by age 65. Some expire at 75. The ones that we sell, they expire at age 100 when the whole life policy endows that it's attached to as a rider. So, for example, someone can have a $100,000 whole life policy. If they have an accidental death rider on there, and for an extra $100,000, that means that the face amount of the life insurance policy is $100,000. The rider would add an additional $100,000 if they die in an accident. That would be double indemnity because it would double the death benefit from $100,000 to $200,000 if the insured dies in an accident. That's how it works. So it can increase the death benefit, and they're usually super, super cheap. And they're cheap because people rarely ever use them. But it is a cool thing to add to the policy. It's kind of a no-brainer, and it's a great way for you to upsell your clients to get some extra premium. So if you find value in this content, please subscribe to the channel, turn on post notifications, and email me at jve@thejve.com. Check out this video up here to learn about every single life insurance policy that you'll need to know for your life insurance license exam course.